Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles.
Happy Friday and good morning. Our top stories today: stocks across the region on track to break their longest winning streak since January. That's as uncertainty over the Fed, the policy there curbs risk appetite. You have Chinese equities actually set for their best week since March on optimism over trade and AI.
EU leaders call on China to open up its market and address overcapacity issues following a summit with Xi Jinping that ended with little progress.
And Chinese policymakers and tech executives are set to gather in Shanghai to advance their push for global AI leadership. We'll preview the World AI Conference just ahead. Good morning once again. Thank you for joining us. We're going into the open today, and it's been a good run the last couple of weeks or so. In fact, as we were just pointing out there, Chinese stocks are still on track, and we'll see what Friday looks like for the best week going back to March. We are coming off, of course, record highs as it pertains to global stocks. We talked about Singapore, and now let's see, it's snapping its record win streak of 14 straight days. Nikkei 225, of course, given the last 2 days or so in the rally there, also money being taken off the table. Although U.S. futures, as you can see, are now trading to the upside, 6,400. Currency markets, nothing much to tell you about here. Well, two things. One is, the ECB decision, roughly, generally uneventful. Wait and see was a takeaway there. We did hit, though, highs on the euro against the, I believe, the pound and the yen. So just keep an eye on those crosses. Dollar yen 147, weaker side of that. We did have Tokyo CPI coming in, slowing more than expected, although it does still remain above the sort of range of the BOJ, or target of the BOJ. A look at the 10s right now. It's a rally across the 10-year yield. Well, 10-year bonds, as you can see, 439 on the 10-year yield. We'll unpack the story on the Fed visit of the U.S. president. Job security for now, pressure and rates still, and this awkward back and forth on the bill.
Oof.
And the amounts that the construction and renovation was actually including. Looking at going into the open today, some weakness coming through here. A50 futures are down about fifth of 1%. Also a pullback in this almost red-hot metals rally that we've seen recently in China. We're now below the 800 level there on iron ore.
Yeah, you know that emoji that where it's like the teeth are.
The big smile.
You're like the awkward, like, ugh.
Kind of looked like that.
That
right?
was like that. That was the feeling that I got when I watched that clip when I woke up this morning.
With the hard hats.
With the hard hats and everything. But it goes to. But what we heard though was that he did mention when it came to his job and this whole what they call flooding the zone, the strategy that Donald Trump does, right? Yeah. You tack in different angles and multiple sort of things, right? When you have an investigation, when you talk about cutting interest rates, you talk about finding the successor, all that, right? But at the end of the day, we heard from Trump almost backpedal a little bit about this whole pursuit of getting rid of Powell.
Yeah, I think he even got asked during that awkward exchange. One of the reporters who was in the background asked, "But what would you do as someone who was in construction property before to a project manager who went over budget?" And he said, basically, "I would fire them, but that's not why we're here.
Yeah.
The Fed is doing a good job. The economy is doing well. We'd still like them to cut interest rates as well, right?" So almost this pivot from that blitz strategy, but giving us a reminder really of maybe some of the outstanding items on that agenda. Look at that. There we go. The white hat. Okay, let's have a look at that exchange and
the highlights.
And the highlights, of course, from that ocular and that recce.
To do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing. Well, I'd love him to lower interest rates. Other than that, what can I tell you? The country's doing really well. I just briefed the chairman on the deal we made with Japan. Japan is putting up $550 billion in order to lower their tariffs a little bit.
Yeah, and as we were just pointing out there, it doesn't seem like we are in a world, when you look at the stock market itself, right? It doesn't seem we're in a world where interest rates are still high. We don't have hot wars going on. have these trade negotiations, which we don't know in what form they're going to end up in. But yeah, global stocks continuing to rally this week quite strongly.
It's interesting. Deutsche had a very interesting note about margin debt in the U.S., right?
Yeah.
The amount of money people are actually borrowing to buy stocks. And they're saying that's actually, in some metrics, reached highs that we haven't seen since the tech bubble.
Yeah.
So that is maybe setting some alarm signals out there about overall the credit markets as well. It's particularly when it comes to U.S. high yield. There is a correlation. Once that does, the margin debt picks up, spreads are going to widen as well. So are there certain sort of red flags that we need to start spotting now in this kind of, as you say, overheated markets that we're seeing in stocks in particular?
Amidst really an absence of obvious red flags, I think, right? And Brandywine, of course, will be joining us the next hour to talk us through what potentially might be those sort of your canaries in the coal mine at this point in time. The other bit of equity universe that we're tracking as well, obviously, is China. MSCI China, best weekend since March. We're looking also at, and we're going to show you some of the graphics a bit later on as well, some of the overheating signals as well in this part of the world, with Shanghai Composite 3,600 on that. Mark Cranfield is with us right now out of Singapore to talk us through the key themes of this week as we go into the weekend. Mark, and is there, I don't know, how are you thinking about the equity market rally at this point?
Well, I'm with Yvonne that there's red flags everywhere, but nobody's looking at them. I mean, it's an extraordinary performance, and it's defying. I mean, funnily enough, I've been speaking to a fund manager quite regularly this year, and our conversation at the end of the week nearly always ends with, well, next week is going to be the down week for equities in America, and it just doesn't happen. So I don't know when that is going to be. Maybe it'll be next week's Fed meeting. Let's see if Donald Trump is in such a good mood after the Federal Reserve leave rates unchanged next week, and probably don't sound very dovish either. They'll, considering the strength that the equity market is telling you, as pretty much as Donald Trump just said there in that piece, American economy is doing extremely well. American companies, because of some of the results this week for the tech companies excluding Tesla, results have been very good. We've got big ones coming up next week. We've got Microsoft, Apple, Amazon, again, likely to produce very good numbers. And even the banks as well have been knocking it out the park as well. So American companies are making loads of money. The stock market is at record highs. It doesn't give any indication at all that America needs an interest rate cut. And that is likely to be the message that comes out of the Federal Reserve next week. And it may well be that they'll try and play down expectations for any cuts in the rest of the year. So that might not go down quite so well with President Trump next week.
You've been talking a lot about Japan. I mean, it seems like we're seeing a bit of a breakout in this equity market once again, Mark. How are you looking at flows right now into this equity market, and really, how sustainable are they?
Well, the foreigners really, they must be so happy because they've been very patient. Since the markets went into a tailspin in April, foreign net inflows in Japan have been consistent. Week after week, there's been new money coming in from foreigners, and yet Japanese equities weren't really going anywhere until this week. When they finally got the trade deal with the United States, Japanese stocks have taken off. The Topix index at the moment is on course for its best week of the year. If it stays around where it is now, even though it's down slightly today, it's going to post its best week of the year. And finally, all that patience is paying off. And yet, Japanese equities are still way behind the performance of Hong Kong and Korea in the first half of the year. It's also way behind there's a broad Bloomberg Asia Pacific index, which is up about 13% year to date. Topix is only up about 6%. So the catch-up potential over the next few months is still very good. The yen is relatively weak, so that's helpful for Japanese exporters. They've got a good deal with the United States. No matter what Korea deal that they get, they probably can't beat Japan's anyway. Europe probably can't beat it either. So Japan is in a good position here to attract more money. Japanese interest rates will probably go up at some stage in the second half of the year, but we're talking about 0.25 on top of 0.5. So it's not as if it's really going to hold back the Japanese economy when your final rate is still way below 1%. So at the moment, Japanese equities are in a pretty good space.
Mark, thank you. Have a great weekend. Mark Cranfield there joining us from MLive in Singapore. In terms of your agenda here today, of course, we're going to continue on and track this China stocks rally as well. As Dave mentioned, the best week since March when it comes to what we're seeing in China. Overbought signals, which we'll talk about a little bit. Turnover certainly is one of those indicators of just how quickly that momentum is really picking up, especially in the A-share market this week as well. Sectors include autos. Also, we had car sales numbers. Insect repellent stocks, Dave. There's been a lot of, I guess there's a new sort of virus that's spreading?
There's
in China.
So we had a rally yesterday, and this really brings to mind what's taking place somewhere near, of course, here in Hong Kong, in the Guangdong province in Foshan. So it's the city's recorded 3,200 cases of, I'm going to try and pronounce this, chikungunya, which is the biggest outbreak of mosquito-borne virus since it first emerged in the mainland nearly 2 decades ago. So we'll continue to track, obviously, what's going on health-wise, and, of course, whether or not we do see that reaction.
Okay, so that's in particular. And then we're watching the likes of JD.com. There's this sort of plans to look at this acquisition in Germany.
Yeah.
Also, Prada, right? We saw what LVMH sales did, and really you're starting to see the slumps in demand out of Japan, out of China as well. So maybe we'll see a bit of spillover there. And earnings, right? We're still talking about some key sort of ones to watch out for, too.
East Rock Beverage, Western Mining are coming out, scheduled to come out with earnings later today. As Yvonne is pointing out, we are looking at some overbought signals. So turnover is one, well, not part of that, but turnover, market activity. Yvonne and I were just talking right before the show. Margin debt's actually starting to pick up onshore. And 14-day relative strength index on the key metric. 70 indicates typically overbought. And as you can see, to varying levels above that, Shanghai Comp has now an 82 handle on its 14-day RSI.
All right, let's bring in James Wang, head of China Equities, joining us from UBS Global Research, head of China Strategy. Are things looking a bit too stretched now?
So we're still positive on the equity market. Certainly from a valuation perspective, it's trading at an absolute level. We're trading close to historical average, so not as cheap as it was before. But relative to global markets, every other market is soaring. So relative to everything else, MSCI China is still trading at one standard deviation cheap. So I think relatively speaking, China's still looking good value. And I think right now, yes, the macro fundamentals are not looking great. So if we look at property sales, it's decelerating. If we look at company earnings, it's not great. But I think sentiment has definitely improved on the ground in China as well as globally, because I think people do see that some of the biggest worries, for example, systemic risks associated with the property market, even geopolitics, China does have its own bargaining tools. And in terms of regulations, some of the backlash against internet, after-school tutoring, it looks like we're repairing that. So I think definitely the market can see a flaw to the equity market. And also you can see unprecedented support from the government for the equity market. We've got the national team buying. So we've got a flaw here. And I think that's why the market has become a lot more buoyant. But in the near term, we do see, particularly in the second quarter earnings, some downside risk because, particularly for Hong Kong, we do see something like a 4% earnings downgrade potential based on analyst forecasts. That's a lot of that to do with food delivery, where the competition has been very intense. So to the extent we do get a bit of an earnings revision, historically that's been negative for equity markets. So we may see a bit of a breather on the equity market, but to me, the overall direction remains positive.
Talk to us a little bit more about that in terms of, because we are going into the thick of earnings season. So we're watching out for food delivery, as you point out. What other areas as well?
So autos in the second quarter, in particular, there's been some competition. Now that's been pulled back since 1st of July, but that could still be a price issue. And if you look at industrial profit, that's been reported by the Bureau of Statistics, earnings were down 10% in May. So that, the negative PPI, that deflation pressure, that's still real. So to me, that's the biggest risk. And Hong Kong, because it's very institutional, it's a bit more sensitive compared to A-share, where it's a bit more retail-driven, more thematic. So Hong Kong probably has more risks associated with the earnings season. So that's where I think some of the risks will be.
You came out with a report just a few days ago about this H-share rally, right? And what's different this time? I mean, obviously everyone's been talking about these southbound flows. What's changed, do you think?
Yeah, I'd say that, so definitely southbound flow has been very important. So we've gone from, so in 2021, southbound made up 5% of the market cap. They've now doubled to more than 10% of market cap, over 20% of trading volume. So you can say there's a bit of A-shareization. So to the extent where stocks have a very high southbound participation, their share price correlation is very high versus southbound. So trades closer to onshore. So to me, that bit's changed. And also, I'd say onshore investors are less sensitive to geopolitics. So you can see in the Hong Kong market, it's also becoming a bit more desensitized. So for example, in 2018, we looked at the share price performance with each tariff that's been announced. The market was down each time about 2 to 3%. And that loss those losses held there for the next 10 days. Whereas this time, it was down maybe a bit over 1% on day one, but it quickly clawed its way back. So I think that's where that Asiaization is really having an impact on the Hong Kong equity market.
So the swing buyer, is it accurate to say, are mainland investors? And the other part to that question is, are you getting any indication that there's also foreign participation in this Hong Kong rally?
For sure. So we've seen, based on our data, so for MSCI China in particular, that's the major indices, we have seen investors adding back into China. And I was in Europe, in Asia, marketing in June, and certainly we've seen a lot of EM investors adding back into China. Previously, they would be underweight. Now they're neutral. What we haven't seen is global mandate investors putting their money back into China. So we haven't seen a lot of inflows into EM just yet. But definitely foreign investors, interest is definitely picked up. So my marketing meetings when I was in Europe was very well attended, and the meetings were quite full. So yeah, definitely interest is there.
Okay, yeah, we'll pick up on that note. Certainly a lot more indicators there. We'll have a sense of what James Wang in the meeting was like there in Europe. Recently, head of China strategy will be rejoining us, of course, out of UBS Global Research here. 60 minutes after the strike of 9 on your clocks right now, which means we're about under 15 minutes away from the opening bell. The final session of the week just ahead. Weakness coming through ahead of the open here. 14 minutes away in Shanghai, Shenzhen, and here in Hong Kong. This is the China Show.
Well, European Commission President Ursula von der Leyen has called on China to open up its market and rectify overcapacity issues as a one-day summit in Beijing closed with minimal progress.
As our cooperation has deepened, so have the imbalances. We have reached an inflection point. Rebalancing our bilateral relation is essential because to be sustainable, the relations need to be mutually beneficial.
Let's bring in our China correspondent, Min Lo, to track. We were expecting not much from this summit, but it seems like this trade imbalance was still a major point of contention between the two sides.
Yes, the two sides did agree on a few small areas of agreement. So they agreed to come up with a mechanism to address the bottlenecks when it comes to the export licenses for rare earths. And China also agreed to ensure reciprocity when it comes to the restrictions when it comes to public procurement contracts. But yes, the trade surplus that we have seen so far this year has already reached a record high in the first half of the year. So it continues to be a major point of contention. And Ursula von der Leyen essentially is saying that the EU cannot maintain the same level of openness if China doesn't address issues of overcapacity, and if it doesn't end what it's calling unjustified retaliatory moves like the investigation into EU brandy, pork and dairy. But meanwhile, President Xi also calling for the EU to open up its market and its trade investment space as well, and calling on the EU to create a more friendly environment for Chinese businesses. So again, does this mean that both sides are going to dial down some of the export controls and perhaps lower tariffs on Chinese EVs? There hasn't been any indication of that, so still very little progress on the trade front.
Where did we see progress, though?
So one of the few areas the two sides had agreed on is climate change. So both sides had signed this new climate change declaration, coming up with updated climate plans ahead of the COP30 summit, which is one area of symbolic cooperation between the two sides, given that the U.S. has pulled out of the Paris climate change agreement. So that's one area where there is some level of agreement. But again, there's the other big complaint from the EU, which is China's support of Moscow, at least diplomatically. And this is where China, the EU is pushing China for more, for it to do more, to place more leverage on, more pressure on Russia to end that war, but not much of a commitment from China. China is still saying that it would like to see a political settlement to this conflict, but not a lot of concrete actions on its part.
Right, Min, thank you so much. Min Lo there on the latest where progress was observed and where probably we need to be paying more attention to as far as what the future might hold. Okay, very quickly before we go into the break here, about 8 minutes away, just to mention as well, this seems to be like a fairly large injection of liquidity out of the PBOC. We're looking at about 600 billion, which renminbi. I'll get you more context on that in a moment. To be more exact, you're injecting a net 601.8 billion renminbi. That's via open market operations. Plenty more ahead. This is Bloomberg. Right, welcome back. Kind of looks like my exam marks in high school, so I was lackluster at best. 14-day RSI here on the major benchmarks going into the open. Suffice to say, the rally's gone quite rapid in recent days. 3,600 on the Shanghai Composite. But then again, other indicators of this awakening, maybe onshore. We're looking at margin debt, for example. We were talking about this, Yvonne, right? We are very near eclipsing the recent high. It might take us all the way back to 2014 levels on this one.
Oh, yeah. You remember what happened then, right?
Yes.
But yeah, April Ma from the stocks team has been watching very closely, right? So they're talking about this outstanding balance has reached more than 10% of daily turnover now when it comes to margin debt. So over the past 5 years, that much leverage buying usually signaled near-term peaks for the CSI 300 and Shanghai Composite. So some warning signs there that maybe things are looking a little bit too hot. Maybe that's why you're seeing a bit of that pullback here in Hong Kong today. We are down by about 0.5%. HS Tech is on offer. H shares also down about 41 points. And a 715 handle for dollar China here today. So we're watching very closely into the stocks to watch. The tech sector obviously still has been that, the big key thing here. JD coming through in talks to buy Germany's economy. I think that's how you say it. This is a retailer or I think groceries, I think they were talking about. Yeah. So certainly, what does this mean in terms of the whole kind of e-commerce space as well? But the stock is lower by about 1% today.
Yeah, other things we're tracking as well, say Wuxi Bio, Jiaojin Mining, on the back of, I think, when you look at gold, for example, and separately, of course, there's been an incident. This week we'll talk more about that. Net income on IMAX itself, we're up to, give or take, about first half, just called 24 million US dollars. In terms of cash calls as well, OSL 863 Hong Kong, we'll talk more about this on the other side of this break. We're looking at a 11% drop on the shares. Cash call out of the company. We might actually have someone from the company joining us later on the show to talk us through this. The Open is next. Good morning. Welcome back. Happy Friday to all of you joining us from across the region. And if you're joining us out of the United States, good evening to you. Going into the open today, so we've seen quite a decent run up across equity markets. Currencies have been quiet. Even more so fixed income with the MOVE index actually now closing in, I think, on 3-year lows. Equities record highs. And as you can see, we are trading sideways, consolidating ahead of the open here in Greater China.
Yeah, maybe a bit of profit taking after what has been a pretty interesting run, right? When it comes to global equities, China in particular, we were talking about some of those warning signs like margin debt that's picking up here right now. Maybe some telling sort of signals there of maybe a little bit of consolidation, as Dave mentioned. But as James Wang from UBS just talked about, right? Earnings season, focus on maybe those downgrades, particularly when it comes to the food delivery sector. This rebound in HIBOR also might actually be a bit of potential headwind for Hong Kong stocks. But still, they're leading towards a still positive on the market overall. CSI 300 is doing this here right now. Basically flat or unchanged, slightly to the downside, as you may call it, though. But Morgan Stanley had a pretty interesting note about this whole anti-involution theme. Laura Wang and her team saying this does lift sentiment when it comes to the A-share market as well. So certainly one to watch because she says, it's very clear now the signals and from policy from the top down. So certainly that's one thing to watch. Obviously, we're going to talk about what goes on when it comes to commodities. Given the hot run that we've seen in the rally in some of these ones like iron ore, that's coming off too. So see a bit of consolidation there. Dalian futures are down about 1.5% here. Coppers as well. Steel, though, still catching a slight bid here this morning. And we're watching very closely what's been going on in the 30-year bond yield as well. It looks like we're flat right now, but we did see about 6 or 7 days where those yields were actually picking up. there on the long end. Flip the boards and talk about Hong Kong here in particular. Obviously, we've been talking about HIBOR and the like here, watching the property space and what that means. Hong Kong dollar still on the weak end of side of things. We're talking about a 7.15 level for dollar China here this morning. But yeah, stocks are basically selling off. Let's see a bit of a pullback here in the tech space today. We're down about 0.75%. JD.com, that's the one to watch here. They are in talks to acquire this German company, Seconomy. There, the shares are down about 1.2%. RBI was saying there's a way, maybe possibly if this goes through, they could narrow that gap with some of the big retailers out there as well. So certainly one to watch. Tencent, Baidu, and Alibaba are lower here this morning. There is a big AI conference in Shanghai to tell you about too. We'll give you a preview with Bell coming up as well. What to look out for, right? And I think investors right now, after the whole DeepSeek movement, they're looking for that next breakthrough when it comes to AI. In China, Xiaomi is also down about 0.7%. Take a look at some of the movers that we're watching out for. Lithium stocks. There was a massive rally that we saw in some of these lithium stocks. Looks like we're seeing another day of that. We're up about 2.6% for Tianqi Lithium in particular. Daiwa coming up with a note, though, saying that what we're seeing in this market speculation that's related to the long-term shutdown of major projects, unreasonable, they're saying right now. But looks like we're still seeing a day of pretty heavy buying there. In terms of insect repellent stocks, we talked about this outbreak or what we're seeing in terms of this virus that is mosquito-borne. And so what we're seeing in Foshan, they reported, I think, close to 3,200 cases of chikungunya, if I can say it right. I don't know, hope I'm not butchering it. But yes, it's the biggest outbreak of this virus that we're seeing in China right now. So mixed picture, but you're seeing some of them actually up about 10% of Chengdu Rainbow Appliance this morning. OSL, this is the one to watch here as well. We're seeing the shares falling about 8.5% here right now. So they did an equity financing. They secured the $300 million for digital asset infrastructure growth. We're actually going to be talking to the CFO, Dave, pretty soon.
Yes, we will. In fact, Ivan Wong, as Yvonne was just pointing out there, will be joining us exclusively in a couple of minutes here around this time in the next hour to really discuss, well, for one, obviously the cash call that we're seeing right now, why they did it, what they plan to do with the money. There's a stablecoin conversation to be had that has engulfed large pockets of the Hong Kong investor space. We'll talk more about that as well with them coming through here in Hong Kong this time in the next hour. Right, as we go into the open today, and as Yvonne is pointing out, it's a day of consolidation. We're trading sideways, if not lower. CSI 341.44 there. For some final thoughts on what else to watch moving forward, James Wang is still here with us, head of China strategy at UBS Global Research. James, I want to get your thoughts on a sector that everyone's been going gaga about, high dividend plays in mainland China. Is there still room for that to run? And at what point does the dividend then go away because people are just chasing this price all the way up?
I think there's still the way to go. So we've got this barbell strategy. And so one of the reasons why the dividend names have done really well is because their counterpart is the government bond yield. The government bond yields are sitting at 1.6, 1.7%. And the investors that are buying it are predominantly insurance companies. So insurance companies need to earn an interest rate differential on their liability side. They're guaranteeing at 2.5%, but their assets can only yield 1.6. So what can they do? They've got to invest in some high dividend names to increase their or to improve their earnings. And so, and if you look at insurance companies' premium, that's continued to grow at 10% clip. And so I can still see increased inflows from insurance companies as well as increased allocation into equities because there's less alternative for these investors. And
that's what we said yesterday from B of A, right? That these asset managers and insurers are willing to take these stocks when the dividend yield gets to maybe 2% and price to book gets close to 1%. That's the threshold, I guess, and this pain trade can continue for some time.
Or unless these companies' earnings start to decline. So if you look at the major banks, right? So their earnings have been broadly flat, or last year they still grew. But if the earnings start to fall, then all of a sudden you're clipping 5 to 6%, but your earnings fall 5%, then you don't get that total gain. So to me, earnings are still important. You still have to have some stability in earnings.
Are there any red flags though with earnings in the major banks? Because I can see the argument of thinner margins because of to the other point you're making, right? Lower rates, but you know the counterpart of those dividends is the central government as well, right? So there is an incentive to keep those dividends going too.
Correct. So because you've got the Ministry of Finance that's injecting money into the major banks, first quarter earnings for the major banks actually down 4%. They've still being resilient. So the consensus for the bank's earnings to stay flat. So to the extent they don't deliver on that, I see some potential downside. Yeah.
I want to get your take on the barbell strategy, right? One side is financials, the other side is tech.
Yeah.
How do I still position around tech now?
So obviously we're staying away from food delivery, but there's still some of the major internet platforms. They're delving into AI. They're still training their models, and we've got the H20 ban just being lifted. So I think sentiment can still start to improve. Now, we haven't had that DeepSeek moment for quite some time. So AI trade has cooled off quite a bit in recent times. But I still think China is developing really quickly in AI. We just need that catalyst for people to refocus on those stocks again. And one of the reasons why those AI names have run so hard in Hong Kong at the beginning of the year is this valuation gap versus the US peers. But that valuation gap has widened because US market has roared, particularly those tech names. So to me, I think the ingredients are there still for the tech names to do well. We just need that trigger. Maybe it's the new DeepSeek moment, or maybe people find a way to somehow monetize AI. Yeah.
We haven't really talked about, I think to some extent, anti-involution, because you mentioned food delivery, right? But which sectors are likely to start reflecting the government encouraging, stop killing yourselves over price wars?
It's been pretty wide-ranging, to be honest. We've seen quite a few different sectors. So we've seen it in the food delivery business. Right. We've also seen, for example, production curbs in coal mining.
Okay.
And we've seen, for example, putting a cap or a floor on prices in solar. And also a floor on prices for hog business, right? So you can see it's happening in various different industries. Now, we do get asked by investors quite a bit on how do we compare to 2015, because we had a supply-side reform in 2015. But the biggest difference is back then, it's the SOEs, it's the upstream companies that were seeing excess supply. And back then, it was quite easy for the government to say, you're an SOE, you need to listen to me, you need to cut your production. But this time, a lot of is midstream, it's private businesses, they have their own incentives. It's harder for the government to just mandate a production curve. So I'd say that for us, the jury is still a bit out on how that actually pans out for the production cuts and supply-side reform.
Let's say in EVs, for example, the earnings start to improve.
I think for third quarter, we probably should see EVs start to improve because we have seen some of the discounts being taken away post the 1st of July. But for some of the others, we may see some improving earnings, but nowhere near the kind of improvement that we're seeing in 2015.
And why not food delivery, though? I mean, if there's such a big push, why is food delivery still seen to be a negative?
Because I feel that food delivery, it's the incentive or the reason behind it is not to do with, it's more to do with protecting small businesses, right? Small businesses, because of this price war, they also have to subsidize the subsidies, right? Or they have to pay some of the subsidies. So protecting the SMEs, I think that was the most important motive behind it. Whereas for the other sectors is to ensure prices stabilize from where they are.
James, fantastic. Thank you so much. Nice to see you. We'll see you again soon. James Wang there, Head of China Strategy at UBS Global Research. Okay, a couple of things to note as we were just having the conversation. Number one is Country Garden, and we have this scoop that's now just out. And so we understand that the company has agreed to some key restructuring asks from a group of bank creditors. They have demanded that. That's according to our sources. Now, the company will be paying the banks about $180 million in compensation for the return of seized capital. But this seems to be, again, to the point I was just perhaps not making clearly, and I apologize for that, that this seems to be a positive because this now clears the way perhaps for more cash flow coming in here. I'm not sure if anything stood out to you, Yvonne, on this so far.
Not too much, but certainly it seems like things are progressing, I guess, in terms of this whole saga. We haven't really talked about Country Garden for a very long time now, so we're trying to refresh our memories a little bit. But certainly, at least this maybe gives a bit more clarity on what this looks like in the coming days or weeks. So we'll continue to watch that one. I'm also checking these lines happening from Thailand now.
Okay.
So the Thailand army is saying that clashes with Cambodia continue for a second day. And this is what we've been tracking, these sort of border clash disputes. A Thai F-16 fighter jets struck those military sites in Cambodia as we start to see this sort of erupt once again, right? And these fresh clashes that have killed at least 14 people. We have seen the Thai baht actually come off some of the strength that we've seen of those 3-year highs of late because of this issue.
Yeah, the currency reacted yesterday when this started, and as Yvonne is pointing out, it's day 2 of this. Vietnam, the latest one to come out, and urging restraint on both sides. We also understand out of AFP a few hours ago that the UN Security Council will be meeting on these clashes. No time specifically was given, but we'll keep you guys updated once we do have more information on this too.
It is the worst border violence we've seen in about 14 years, right? So we're watching this, but yes, there's conflict basically, and it's spread out 6 locations along that frontier. So certainly that's one thing to watch right now. Plenty more ahead. This is Bloomberg.
Right, welcome back. China's most important annual AI summit begins in Shanghai tomorrow. It's the World Artificial Intelligence Conference, or WAIC, is devised to showcase the country's tech advancements, and attendance may actually set a record this year.
Let's get to our Asia tech correspondent, Annabelle Drillers. She will be there for us and joins us with what to expect, right? So everyone's hoping for some news, some breakthroughs. It's been a while since we've seen anything since DeepSeek, I guess.
That's true.
What are we expecting?
Yeah, probably not a second reasoning model to be released from DeepSeek. We probably can temper our expectations on that front. But I think, to your point around what we're expecting, it is just a very sort of star-studded appearance. I mean, we've got Premier Li Qiang, for instance, who's opening the conference tomorrow morning. And in terms of the attendees or who's going to be speaking there as well, I mean, you've got the big names like Tencent, for instance, Alibaba, ByteDance, but then also some of the more lesser-known names or the ones that are really emerging. So the speakers include the Minimax founder, the Step Fund chief scientist. These are some of the AI names that really rose to prominence this year. This event, as you said, it's really about sort of showcasing the latest cutting-edge technology from China in the past. We've seen it attracting the likes of Jack Ma, for instance, Elon Musk, those who actually did a panel together just a few years ago.
I remember that.
Yes, exactly. So
it's quite fiery, I remember.
It was. Yes. But what else we're going to be watching for is just the sheer number of humanoids that are going to be on stage as well. Because, I mean, the companies I'm speaking to that are going to be there, Unitree, Engine AI, Foria, Ubitech, I mean, Agibot, there's a lot of names on the list. Venture capitalists as well. That's going to be an interesting one because we're really starting to see more energy and more funding going into this space. Be interesting to see as well who's raising new funds and where are they going to be putting that money to work.
Any other big companies we should be focusing on? Any global names?
Global names, not as much. I mean, it's just said Elon Musk has been there in the past. They showcased actually some of their own humanoid robot technology last year, but it doesn't appear they'll be there this year. In terms of sort of the international well-known speakers, there's also Geoffrey Hinton, who's sometimes known as, or is known as, the godfather of AI. He's also in attendance as well. But, I mean, you're kind of unlikely to spot US companies because it's reached a point really where if you're a US company or you're a China company, you're almost trying to be avoiding sort of getting caught in any sort of geopolitical tensions. What will be interesting as well is sort of the shift or the play that China is making now to really increase its international recognition for its AI technology, because among the panels that we've got, for instance, there's one called a high-level meeting on global AI governance, and that really speaks to the broader competition between Washington and Beijing. It's not just about infrastructure, it's about also dominating the standards and the governance of AI as well.
All right. I'm looking forward to the stand-ups with the robots.
Yeah.
That's going to be a lot.
Yeah.
I'm very, very excited for this one. Yeah. It's definitely the biggest one of the year for AI.
It is,
China.
yeah. Belle, great stuff. Annabelle Drillers there. She's heading to Shanghai pretty soon. Some other stories that we're tracking today. The Financial Times is reporting that at least $1 billion worth of NVIDIA's top AI chips made it into China in just 3 months, despite U.S. export bans. Now, citing sales contracts, company filings and sources, the FT says Chinese distributors sold restricted processors through a black market channel. Washington has since reapproved sales of NVIDIA's H20 chips, which performs below the restricted B200. LVMH sales fell in the second quarter as demand slumped in Japan and China. Revenue at its key fashion and leather goods division tumbled 9%, which was worse than analysts expected. First half profits slipped 15%, and shares are down nearly 30% over the past year. Still, portfolio managers say LVMH is better positioned than rivals to weather the slowdown. Chinese e-commerce firm JD.com is in advanced talks to acquire Ceconomy. Here's a deal that could value the German electronics retailer at $2.6 billion. Now, shares of Ceconomy soared after it confirmed Bloomberg reporting on the talks. The offer price represents a 23% premium to its Wednesday close.
Right. Samsung says it welcomes competition in the foldable phone category as the electronics giant awaits an entry from its rival, of course, Apple. We spoke exclusively with the president and mobile experience COO at their Suwon headquarters about their latest devices and the impact of tariff threats on their supply chains.
You know, rather than focusing on competition, I think we have been focusing on our consumers. What are the experience that we can bring to the consumers and how complete they are? So we've been focusing on those. And I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers. So we are welcoming kind of others to join this category, which we created back in 2019.
When we see the pressure on Samsung semiconductors and we see the success in mobile, does that change your thinking about how heavy your shoulders are at this point?
No, I mean, our pressure has been there for all the time. I mean, nothing has changed. And I think there's a, I think Samsung is one of the companies who has every aspect of this supply chain. Not only from the components to all the way to the devices and also application and services. So we believe there will be a big synergy we can have across all these different business units, and we'll continue to kind of utilize this complete ecosystem that we have.
Let's talk a little bit about the tariff concerns around the world, because President Trump says that potentially there could be a 25% tariff on Samsung phones not produced in the United States. How are you preparing for that?
Very good question and tough one. So Samsung has long established multiple manufacturing facilities in key regions around the world. That kind of gives us a flexibility in dealing with or responding to any changes in other countries' kind of trade policies, not just the US. So we have established that kind of a flexible system. And in regard to this potential tariff by the new US government administration, there are a lot of still uncertainties.
We have seen that deal that at least brings down the threats of tariffs from more than 40% to 20% for Vietnam, which is a huge manufacturing base for Samsung. How do you see the developments and how much of a benefit could that be? Or does it still hurt because it's still higher than it was originally at average 3%?
This new tariff policies obviously are very challenging to us in terms of business. And the mention about the Vietnam, obviously the lower the better. But also, as I mentioned, we do have multiple locations, multiple manufacturing capabilities. And over the past few months, we've been working very hard to make sure the products that are bound to US can be manufactured in any of the locations. Not any, but in multiple locations. So depending on, so we're looking at the Vietnam, but also we're looking at Korea, India. I mean, what will be the final tariffs? So as I mentioned, we're going to just do a lot of optimization according to the final numbers. But the lower, the better.
Is that easy to adjust production?
That we have been working very hard to make sure once you make that decision, that can happen really quick. So we've been doing a lot of preparation.
Yeah, that was our colleague, of course, Sherry An, with the president and mobile experience CEO of Samsung there, of course, at their very fancy mobile phone showroom, I believe, at their Suwon assets. Right, plenty more ahead here on the shows. We'll get you an update of markets shortly. Beautiful look at Hong Kong this morning. This is the China Show. Welcome back. We're looking at solar stocks. Citi's out with a note here that the pricing law and the amendment there will be positive for the sector. Not much reaction so far on your screens. This was, of course, has been a very a concentrated area of focus of late. Let's look at shares of this biolab stock here that is debuting and quite a substantial move to the upside here.
Yeah, so first day of trading looking really good here. This IPO was priced at the top end of its marketed range, right? So we're talking about $76 here right now for the stock with that IPO price of $35 really, and raising 1.3 billion Hong Kong dollars. But yes, it's this whole biotech sort of theme still very much hot right now.
It is. This is the intersection of that theme and also the fundraising environment. IPO to a share sale here in Hong Kong, and OSL was down as much as 11% at one point. Share sale there, in fact, from the company. The CFO joins us as well in the next hour. Also joining us is Brandywine Global to talk us through all things fixed income. The second hour of the China show is just ahead.
Welcome back to the China Show. Here's a look at the HSI a half hour into the session here as we wrap up a trading week, which has been pretty good, right? We're still talking about, we're heading into one of the best weeks since March for MSCI China here. And that's why maybe perhaps we are seeing a little bit of consolidation here. We're 0.6% to the downside for 8 shares this morning. But, you know, when you talk about China equities here right now, I think overall sentiment is pretty good. Right, you have the likes of Laura Wang from Morgan Stanley talking about what's going on in the A-share market here right now. So, of course, you have this progress on U.S.-China negotiations, but yes, we're going to say it again, anti-involution. That certainly is part of the reason why we're seeing this rally too.
The first time I heard the involution term reminded me, remember the Dance Dance Revolution? Thing a few years ago, not more than a few years ago. That was, it's been a while.
That was my jam.
That was
after school.
Didn't you buy a mat? Didn't it come with a mat that you?
Yeah.
Came with a mat, and okay.
Yeah.
If you think about it, though, it's not they're not really teaching you how to dance. It's really just foot coordination. If you think about it, it had really nothing on the upper end of the. Anyway, so. Positive the initiative's potential to enhance earnings growth and ROE over the next 1 to 2 years is what Laura Wang is saying on this specific issue. We've heard this week from several analysts, including James Wong of UBS earlier, and yesterday Winnie Wu of B of A, really giving their initial take on what this really means for the equity market.
Yeah, and for Laura Wang, she says the top-down signal becomes stronger and clearer. So, yes, there's a reason to be optimistic, but you have the likes of Winnie Wu saying, look, you got to hold your horses a little bit, right? This is a 3 to 5 year exercise, potentially, if things actually get executed the right way, right? But there are ways to kind of play, right? It's the cement stocks. It's like the infrastructure plays. But food delivery, you have the likes of James Wang saying from UBS, that might still be the negative because of what's really going on there, right? It's not really something about price cuts and overcapacity and whatnot. It's about really helping merchants and the like here, which is going to be negative for some of these food delivery apps.
Yeah, so they're excited about everything else but that, according to UBS there. Let's have a look at markets right now. So, you know, obviously within the Chinese market, it's been a terrific week. Yvonne was pointing out, of course, best week since March. Overheating signals in mainland markets. One market that, you know, in fact, almost all the markets you see on your screen specifically are exhibiting signs of overheating, right? I think S&P RSI is above 70 last I checked. The Nikkei's obviously had a fantastic 2 days.
Hit a record yesterday, right?
Who would have thought we'd be trading at 42,000 this time last week? You know, the consensus was range bound until next year, until next week happened from last week, and then here we are right now in Singapore. There we go, record win streak, snapping that 14-day run. In fact, on Singapore, we've never been this high on the RSI and that. The chart's going to show up on your screens, right? 91, record high some more, right? On the index itself. The Asia Pacific.
I don't work for it. Confirmed sweat.
Confirmed hot. This rally's got some proper sambal on it. Asia Pacific, notwithstanding, also exhibiting overheating signs. But then again, overheating signs is just another way of saying upward momentum has been extremely strong. We're now at an 80 handle on the Asia Pacific benchmarks. Yeah, this goes into really the top themes we've talked about this week.
Yeah, right. I mean, this, you know, are things looking a bit stretched to this equity market and the like? And then there's a lot of talk about, what's been going on in the long end of the yield curve, right?
The melt-up, yeah.
The melt-up that we're seeing in yields, even in China this week. Certainly this goes to show the fiscal concerns. That certainly is one thing. And in the U.S. in particular, right? I mean, the whole question about who's going to be leading the Fed in a few months' time. I think we got a little bit more clarity maybe today in that whole renovation tour.
On that specific issue, yes.
Can we show the video, though, of just kind of like the hard hats? I mean, it was just such that exchange that was just quite awkward at one point. But there was a part where we talked about Trump really maybe backpedaling a little bit on his whole pursuit of getting rid of Powell.
Yeah, the blitz strategy from all angles.
Flooding the zones.
Flooding the zones. In fact, let's play it out so our viewers can have a sense really of that specific news line on the Fed chair's Jay Powell's job security.
To do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
All right, so the Fed chair's job is not going to show up on LinkedIn anytime soon. Carol Lai is with us. Out of Singapore, portfolio manager and senior research analyst at Brandywine Global. Carol, good morning. Happy Friday morning to you. Thanks for joining us. One of the key risks you've highlighted in one of your reports here is, the uncertainty around Jay Powell's job. We just heard from the U.S. president just now there. Can I take this risk off this list for the moment?
Well, you'll never know, right? It's Trump you're dealing with, so it is still a risk going forward. And we've got a Fed meeting next week, so we'll see if Powell does and the Fed does cut interest rates. But I mean, just looking at the data that came in, I mean, you have had very low claims numbers, right? That came in yesterday. So it does show that the job market is still somewhat resilient. I mean, there are other parts of the U.S. economy, like the housing market, that is slowing to some extent. But if you just look at jobs, it's not telling you that the Fed should really be cutting rates next week, right? Maybe 2 cuts, for the rest of the year. But next week may be a bit of a tough push.
What's going on the long end in particular, right? We're talking about a U.S. 30-year yield that's getting very close to about 5% here right now on a lot of these fiscal concerns, right? How much more room do you think U.S. rates can actually go?
I mean, we all know, as you pointed out, right, Yvonne, the 30-year reaching that 5%, and I think we cannot. The number of times that it has tried to cross 5% is just like, will it really get across 5%? I mean, I think there's been 3, 4, 5 times that it has tried to do so. To be frank, I think the fiscal issues in U.S. Has somewhat passed over in that sense because, the one big bill has passed and a lot of the spending is going to be more focused on next year. So we do feel that there's quite a bit of fiscal, risk premium that has already been priced in the long end. Now, next week will also be interesting because there will be the refunding numbers that come in, right? As we all know, the Treasury wants to move more of the issuance to the front end, to the T-bills. And so that may actually then, again, help, long end rates to come off and not eventually cross 5%, which is basically what they want to control. It's literally almost controlling the yield curve. Yeah.
Yeah, of course they can't say it that way, right? So Carol, would you say then that's two-part question. Is 5% a good buying opportunity on treasuries? And what do you broadly think about, fixed income strategies that have a large exposure to long duration U.S. treasuries?
Right. I mean, if you look at the, if we think about, the 30-year treasuries not having been able to sustainably get above 5%, and thinking about the macro backdrop. Now, despite job, claims yesterday, seemingly, being going lower. But if you look at the trend, there is a trend that is seemingly telling us that the job market is weakening, right? And if you look at various parts of the economy, we have not even factored in, like, how much is tariffs. And now tariff rates are now averagely about, hitting over almost 20%, right? So that will have an impact eventually on the US economy, not yet seen in that. So if you look at, again, personal real incomes, which has really been falling in the US, all these signs do tell us that perhaps we are going in for, US growth that's going to be weaker, below trend, maybe 1-ish kind of percent. And the starting point is actually 3%. So 3% to 1% is a leap down, right? It's almost like a shaving off of 2% of growth. So there is that weakness in growth coming up. And so, having 30-year treasuries in a portfolio, in a fixed income portfolio from here, does make certain kind of sense, right? And so there is a buying opportunity, but at the same time, we are not overly bullish on US treasuries. Why? For two reasons. The first is that we kind of really need a recession for treasuries to really rally in hard. The other thing is that we kind of need to be also quite mindful of a stagflationary scenario from here, where treasuries may not benefit as much. Like we said, there is that growth concern, but there is also the inflation concern, right? It's not picking up in the numbers yet because, there was tariff negotiations that went on for 2 to 3 months. But eventually this will start to kick in, right? So you're going to get inflation that's nearer towards 3% by the end of this year or so.
Carol, I have to get your take on Japan. It was a big week this week. We've been seeing, the 10-year yield basically jumping to the highest since 2008. On the back of this upper house election defeat by the LDP party, there's now this sort of shift, or at least people are assuming that there's going to be a shift more to the right. This talk of more aggressive fiscal stimulus as well. I mean, what should we be doing with JGBs at the moment?
Right. That is also, another. That's really, I think part of the big reason why we are still seeing, curves that are kind of steep across, globally. And I think Japan has one of the steepest curves. Now, there's really two things here at play. And the first is to do with, like you mentioned, LDP. There's going to be changes within LDP. Are they going to move towards more to the right? Is it going to be there? I think there are 2 to 3 names that are up for, the change in the prime minister eventually. And if one of them, who is more fiscally expansionary, comes in, then that will also, push up long end bond yields. As of now, I think, super long end, if you look at the 30 years, it has kind of fluctuated between, 3 to easily about, 3.2% and stayed somewhere around there. So it does look like some of that is being priced in already. The good thing is that the MOF is, very clear, and they know that, they're having the investors are not really liking expansionary fiscal here. So they have already come up to say that they're going to try reduce, on the back end, move it more to the front end, exactly like what the US is doing. So that kind of helps to keep that yields capped a bit lower. The other thing to think about as well is the BOJ, right? Because if the BOJ starts to raise interest rates, that will also actually help to flatten the curve, being the front end goes up. And like I said, if quite a bit is being priced into the longest end already, then, it does look as if, like, the curve will flatten. The back end, to be frank, at this kind of levels, it definitely looks interesting. Everyone knows. I mean, it's an all-time high, and we have never seen. I mean, you have to really go back like 20 years ago to just get this kind of levels. Domestically, I think the domestic buyers do think it is interesting, but it's just that everyone's waiting for the first buyer to step in, literally. And the foreigners have been coming in because it does look interesting, right? So I would say, at this kind of levels, it interests us. We like it. But it's all, it comes back again to the domestic buyers need to come in as well to kind of support the market at the end of the day.
All right, Carol, we got to leave it there. Carol Lai, portfolio manager and senior research analyst at Brandywine Global, smiling through all of it. I love it. We're also speaking with the OSL CFO Ivan Wong exclusively at the bottom of the hour, discuss their plans for the fresh capital they've raised, as well as upcoming stablecoin legislation here in the city. This is Bloomberg. Well, to a Bloomberg scoop that just came out a few minutes ago, we've learned that Chinese developer Country Garden has agreed to some key restructuring terms a group of bank creditors have demanded, potentially easing the path for an overall debt deal. Let's bring in China credit reporter Trista Luo with more. What does this mean overall for the restructuring story for Country Garden now?
Yeah, so right now, we know the company has agreed on some key terms, what those bank creditor demanded. So in last time's wind-up hearing, bank creditor actually said if the company failed to agree on those terms, it would be a deal breaker. So right now, it's actually good news for the overall restructuring plan, because we all know the plan has already won some support from the bondholders, but it actually needs to get bank creditors on board so that the whole plan could be effected.
So what's next now in terms of this long restructuring process, and what's next for the company?
Yeah, so the company actually previously said that they expected the restructuring to be effected by the end of this year. So we will watch closely on whether they can achieve that goal. And the next wind-up hearing will be on August 11th. So we will also watch what will be discussed there. I think that's some two key things we are watching on this name nowadays.
Yeah, I mean, it's interesting. With the High Court judge, we've been talking about Linda Chen.
Yeah.
We've talked about her in a while.
Yes.
But she said back in May, useful and good progress. What would that constitute?
I think this, the company agree on these key terms, bank demanded, is actually a very good progress. I think everyone would love to see that. But next thing is also we are waiting for the bank creditor to sign on the border restructuring plan. I think that's the next thing we're still watching right now.
All right. Trista, thank you. Our China credit reporter Trista Luo there. In some other corporate news this morning, Paramount shares rose in late trade after the Federal Communications Commission approved its merger with Skydance. Now, it concludes a year-long saga that included settling a lawsuit with President Trump, as well as concessions on diversity initiatives and news judgment. With backing from Redbird Capital Partners, Skydance will merge into Paramount and make an investment of more than $8 billion in the company. The Financial Times is reporting that at least $1 billion worth of NVIDIA's top AI chips made it into China in just 3 months, despite U.S. export bans. Now, citing sales contracts, company filings, and sources, the FT says Chinese distributors sold restricted processors through a black market channel. Washington has since reapproved sales of NVIDIA's H20 chip, which performs below the restricted B200.
Right, let's stay on the broader theme of trade agreements, but let's turn to India, which really after 3 years of intense negotiations, India has now signed a trade agreement with the UK. There we go. So the deal eliminates tariffs on products ranging from cars to alcohol. Now, Indian Commerce Minister Piyush Goyal says that the deal is a win-win for both countries. He also told us that he is confident of reaching a separate trade deal with the United States.
I've had some wonderful engagement with my friend and colleague from the U.S., the Commerce Secretary, Mr. Howard Lutnick, the United States Trade Representative, Ambassador Jameson Greer are both very dear friends, and I'm sure we are looking at a great business with the United States in the years to come.
You've managed to ink some really key concessions, especially on the national insurance payments front. Are you hearing from companies that they want to increase investments in the UK as a result? And if so, where?
Well, I think Indian business is very excited that we've got the free trade agreement in place. We've got the double contribution convention in place. Indian businesses have been very bullish on the UK. And if one looks at the investments flowing in from India to UK, it's a tad more than the other way around. So I think this will also encourage greater investments because of the stable and predictable environment, business environment. It'll also open the doors for more robust and resilient supply chains. It'll ensure that we can both work as trusted partners, expanding trade in goods, in services. I think Prime Minister Narendra Modi and Prime Minister Keith Starmer both very clearly recognize and articulated today that this is a milestone and historic achievement which will hold good stead as we double our trade, as we grow our jobs in both countries. It's a win-win for both UK and India.
Are any big Indian conglomerates already planning that expansion?
I think we saw, for example, the Bharti Group become the single largest investor in British Telecom.
Yeah.
Clearly a sign that there is trust between businesses on both sides. In fact, they are also a major part of the OneWeb. Yeah. We are aware that many pharma companies, many IT companies already have a significant presence in the UK. Companies working on pesticides and chemicals and very many sectors are looking at the UK as a possible center both for goods and for services.
The other talks were, of course, ongoing on the bilateral investment treaty. Can I ask, what are the sticking points remaining on that?
Well,
and what would you like to see?
Negotiations happen in the negotiating room. We don't discuss that in the media. But I do hope we will get that also across the hump soon.
And are there any concerns, especially for Indian generics makers, or in terms of dumping from India, that are still there, or have those all been resolved?
Well, in fact, we were being wrongly classified as a country which had any problems with our patent and our IP regime.
Yeah.
We were able to have very, very good discussions with the pharma companies, with all the stakeholders, both in India and in other parts of the world. Concerns that came to our attention which merited any change have been addressed, and which has given a big boost to patent filing, faster clearances. In fact, in the last 2 years, we've done nearly 160,000 patents being issued, so much so that we don't have much of a backlog left anymore. And I think we've been able to create a trusted atmosphere with fast-track clearances. And we now have a robust intellectual property rights chapter, both with Switzerland and with UK. Two countries which always used to be at the forefront of innovation.
There you go, the Indian Commerce Minister with our colleague Ruth David in London. Plenty more ahead. This is Bloomberg. Right, welcome back. A glance at some of the big movers over in South Korea, which are really the big movers across the region. Think of earnings season, a couple of names on your screens. LG displayed not coming up. There we go, coming up right now, bottom of the screens. Out around midday yesterday. Market seems to be moving on this still. You had beats on net income. It's the biggest mover to the upside across the MSCI Asia Pacific. Hyundai Mobis, of course, the parts maker, and of course Kia, which is of course the massive car maker in Korea, up 1%. Shinhan Financial, I believe, is due out with earnings later today, if I'm not mistaken. There we go.
Okay, so focusing on earnings there. Meituan, we're one watch here. So a latest analyst from 86 Research just cut the stock to hold with a price target now of 114, right? So that implies about a 15% decrease from the last price. Obviously, as we've been talking about food delivery, that still remains to be where you're seeing the most kind of ferocious in terms of price wars and the like there. So certainly that's one thing to watch in the food delivery space. Meituan is down, so 1.5%.
Okay, going into the thick of Friday here, so we're looking at Asia Pacific consolidating after what's really been a manic few days of gains. That's led by Japan, that's been led by Korea, and separately Hong Kong. So you really have the big markets in the region here contributing their share, and why we're trading at 210. On the regional benchmark, S&P futures are tacking on even further at gains right now, 17 points to the upside here. And Singapore is snapping its record win streak. No longer is This is Bloomberg.
.29 a.m. in Tokyo. Japanese markets heading to lunch break in just a moment, and we've been talking about consolidation overall, really, and we're focusing really on what has been a pretty interesting week in Japanese assets, right? This breakout that we're seeing in stocks, we saw hitting records just this week as well. But yes, a bit of a pullback here in Tokyo today.
Yeah, we've one of the few instances where the word breakout doesn't mean a bad case of acne, as they say. Okay,
it's a good thing.
It's a good thing. It's a good thing. I forget who it was a few weeks back that said, we have to wait for 2026 for Japan to wake up again. But who would have thought, right? We've had big weekend in elections, and of course the trade deal, which BOJ's coming up.
Yeah,
really reawakened the land of the rising sun. 42,000 on the Nikkei. The other big story we're tracking, and this one is really today, right? This red hot market in Hong Kong for cash calls. So we had this massive IPO. We have another cash call, of course, today. We're talking about coming up on your screens very shortly. China Resources Power? Chigama? Puso Chiga. Okay. We're looking at the
OSL.
OSL, that's the fintech and digital asset company. We can talk about China Resources Power, I guess, another time. Big company, though. Still a good company. So the company raising $300 million share sale today. In the initial minutes of today's session, we were down 10-11%. I believe we have come with flows today. That's typically what happens with price, given when you have a share sale. It does come ahead, of course, of the other parallel, separate big story, major story here in Hong Kong, stablecoin legislation taking effect in Hong Kong at the start of next month. Shares on your screens, the correct one, mind you. There we go, negative 10%. Joining us here exclusively on set, Ivan Wong, OSL Group CFO. Good morning and nice to see you. Thanks for coming in.
Thanks for having me.
So it's quite a bit of money, as we talked about during the break. What do you guys plan to do with all this new cash now?
Yeah, so OSL, we are the first digital asset platform in Hong Kong to secure the VATP license. Since last year, we have been on a global expansion drive. In the past 6 to 9 months, we have acquired 4 companies. So part of the proceed, we will continue to identify high-quality companies that we can acquire to help us scale our operation. Secondly, with our global expansion strategy, our vision is to build a global financial infrastructure, leveraging crypto and stable coins for global payments. So part of the proceed we will be using to apply for licenses globally and also build our global operation so that in the future, for any 2 points in the world, our customer, our corporate clients, they can use our network to conduct fiat to fiat transaction and crypto to crypto transaction or crypto to fiat transaction. That's the dream that we are building.
You said you've already made some acquisitions. I'm just wondering, what else do you have your eyes set on? Any targets you can tell us about?
We are looking for high quality assets in the Web3 space. Companies that have license, companies that are fully compliant, and companies that have a global operation with substantial revenue.
Okay. Well, can you give us maybe a clue of where? I know if you can't talk the specific names, of course.
Yes.
I would imagine that's somewhat confidential. Yes. But what kind of assets do make sense within your broader strategy? And what ticket sizes are you looking for as far as the deal size?
Got it. If you look at our historical transactions, right, we have acquired virtual asset exchange in Japan, in Indonesia. We have also acquired a listed company in Canada called Bensa that have 45 licenses globally in Europe, in Canada, and also in the US. So if you look at the global network that we are building, North America and part of Asia, we already have the network and the presence. So what we need to do is that we just need to complete the puzzle to build a truly global network. So what are the missing countries that we are looking after would be Vietnam, for example, Thailand, Turkey, and also LATAM, given that there's a massive trade flow between LATAM and China. And the other topic that you mentioned about is stable coins, right? And stablecoin has been the key use case for stablecoin would be to enable cross-border payment transactions. Right. And that's why we are building the global payment network.
I mean, there's so much, debate and talk about this in Hong Kong, right? We talk about stable coins, and there's this legislation that comes into effect in just a few days, August 1st, right? Are you applying now for a license in Hong Kong?
Yeah. So for us, we are a digital asset trading platform. Actually, more than half of the transaction volume on our platform are stablecoins. So it's very natural for us to keep an eye on the stablecoin licensing regime, not just in Hong Kong, but also globally. For example, in Europe, in Singapore as well. And for sure, in some of these markets, when the opportunity is right, we will apply for such a license.
Including here in Hong Kong?
I would say very likely.
Okay, well, do you get a sense that because of what is now going to be in place in Hong Kong, do you get a sense that other regulators in other markets will take this as a model to be able to then follow and do their own thing as far as stablecoin legislation is concerned?
That's very likely. Actually, if you look at the virtual asset licensing regime, right, Hong Kong is ahead of other markets.
Right.
And so when we go out to overseas and apply for license, a lot of regulators, they're actually learning from the Hong Kong model. And I wouldn't be surprised that once the Hong Kong licensing regime is out, other countries and other markets will follow.
Are you in talks then with any other players out there in this whole sandbox that HKMA has kind of made here on stablecoin on doing any sort of collaborations once this law comes into effect?
Yep. For sure, given that we are a licensed crypto exchange in Hong Kong, right? Our exchange is a natural use case for stablecoins. So there are lots of discussion between us and companies that have an interest to apply for the license to find ways to work together. Very simple. They can list our stablecoin, and we can help them to pair with our trading players on the OSL exchange. So that would be one key use case.
What do you think of the bill? Sorry, just to backtrack. In basic question, what do you think of the bill that was just passed that allows stablecoin, of course, in here in Hong Kong?
When we look at the bill, I think it's really well drafted. And when we look at the bill, we think that the HKMA has spent a lot of time talking to different regulators and learning from the best practices from other countries. So from our perspective, we think the bill is very sound. It would be a good practice for other countries to follow.
Despite all these developments in Hong Kong, it seems like we're still lacking large foreign players. Why do you think that is?
That's actually not the case. So because we are a global business, we talk to players in Hong Kong, we talk to players globally, in Southeast Asia, in the US, in Europe as well. Actually, a lot of the Web3 companies, right now, increasingly they are going to Hong Kong and look for opportunities. And Hong Kong, right now, under the Hong Kong government, we are pushing for development in the Web3 industry, right? So that really attracts a lot of attention to the city.
What are the missing pieces? To borrow your puzzle analogy earlier, Hong Kong's trying to create this virtual asset ecosystem. This is a major step in that direction, of course. What else does Hong Kong need to do to complete that puzzle, whether that's luring more talent in, what have you? If you had a wish list, what would that be?
Yeah. So there's a lot of debates about stable coins, about virtual assets in Hong Kong, right?
Yes.
However, we all need to realize that this industry is new. Hong Kong only issued virtual asset license last year.
Right.
So we are actually in the year 2 of this industry. From a regulation perspective, we understand that to be prudent, the regulation will be stricter at the very beginning. And once the players are operating in a fully compliant way, increasingly there will be more relaxing in the regulation that allow us to offer more products to our customers. And we actually hope that process can speed up, given that we are in year 2 of our operating history.
China seems to be warming up to this whole stablecoin theme. Do you see opportunities there now?
For sure, because of the stablecoin bills and because of the use case for stablecoin, there are lots of discussion about using stablecoin for cross-border payments, right? And China being a global manufacturing hub, it's very natural that there are a lot of companies, right, that are thinking about using stablecoin for global payments. And that's why there's so much debate in the markets right now about stablecoins. So for sure. I think as the license regime is out on the 1st of August, then we will be clear who will be getting a license, what are the use cases that they will be promoting, and that will give us a lot more clarity going forward.
Fantastic.
Ivan, great to have you. Thank you, Ivan Wong, there, OSL Group CFO, joining us. We got plenty more ahead. This is Bloomberg.
Welcome back. So Japan's ruling Liberal Democratic Party lost support in last weekend's upper elections to opposition groups, including, of course, the right-wing populist Sanseito. Now, much of that is actually being blamed on public frustration over inflation. Today's Bloomberg Big Take examines Japan's evolving political landscape.
Yeah, let's get to Tokyo and our economics and government reporter Yoshiaki Nohara. Yoshiaki, a great piece there, really, and maybe as we think back, right, what really happened the last couple of days, what do these election results really tell us about Japan?
It's showing that clearly that the ruling Liberal Democratic Party, which has been in power for decades in Japan, pretty much non-stop, is losing some critical grounds to upstart parties, including the Sanseito, which is a relatively new but populist right-wing party. So the LDP is losing some key conservative base to the uprising party.
And what is the current situation now of Ishiba's premiership?
David, it's very fluid and it's very uncertain. And I know that's not something that markets tend to appreciate. There's a lot of speculation that the pressure is mounting for Prime Minister to step down, but Prime Minister is denying all those media reports, trying to hold on to power. But remember, the ruling party is in the minority in both chambers, which is highly unusual here. So, it's really difficult to say what would come next. But one thing is certain, nothing is stable at this point.
And what does that tell you about Japan as a safe haven for investors? Is that now at risk, just given all this political uncertainty now?
Well, Yvonne, that's a great question. And I think especially after Japan was able to reach a trade deal with the U.S., which reflected some uncertainty over the investment environment here, I think that now the risk is that maybe political establishment here is, unraveling a little bit and giving up that stability that defined Japan for decades as a haven status here. But it's hard to know that how long and how big this momentum is going to be toward uncertainty. But like I said, it's very fluid, the situation is, and we are paying close attention to each development. So some instability to the haven status, but we don't know how deep and how long it's going to be.
Yoshiaki Nohara, thank you so much, our economics and government reporter there. Suffice to say, strap in, get your hard hats on for some very awkward conversations taking place. Speaking of those two things.
Speaking of hard hats.
Yeah, you might have already seen this, but what an exchange. With the U.S. president's visit, of course, to the Fed. And, of course, the news flow that came out of that was, of course, there's no reason to fire Jay Powell at this point in time?
Yeah, he says it's not necessary. He toured the renovations, doesn't think that there's grounds for firing either. So downplaying those concerns.
And
when he mentioned tension, no tension, he said. You decide.
Yeah.
So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1,
3.2. This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
our entire capital.
Yeah, you just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But it's not new.
So we're going to take a look, We're going to see what's happening, and it's got a long way. Do you expect any more additional cost overruns?
Don't expect them. We're ready for them, but we have a little bit of a reserve that we may use, but no, we don't. Expect to be finished in 2027. We're well along, as you can see.
You remember you watch Friends, right? Remember that scene where Ross's dad at the wedding had this big argument with, I think, the parents of Emily, who was supposed to marry in London, and they had this big debate over who was going to pay for the renovations at their house. And then he was like, "Oh, I'm not paying for your renovation." That seems to be that's given me those vibes.
I thought you were going to go pivot.
Yeah.
Pivot. Cut rates. Pivot.
Well,
No,
yes.
okay.
That's since you bring it up.
We can always find Friends analogies with everything we talk about. Okay. Speaking of, well, we're going to talk a little more about something else now, completely different.
Yeah.
Let's talk about football. Why not? It's
Kicking
the
can
weekend.
down the road. Liverpool's in town.
Yeah.
And this conversation we had with yours truly.
Aww.
There we go. Coming up very shortly. Stay tuned for that. What a handsome fellow. Right, English Premier League champions Liverpool FC are in town. They have a series, they have a match, of course, coming through this weekend against AC Milan. We sat down, of course, with the CEO to talk us through what's going on the pitch, off the pitch, their new partnerships, and, of course, the tragic incident very recently of their star player, Diogo Jota, and his brother. We spoke exclusively with Billy Hogan.
Obviously, it's been an unbelievably difficult last couple of weeks since Diogo and Andre's passing. Obviously devastating for all of us at the club, even more so, of course, for his family. And so, we're here in Asia on tour, but we're obviously staying in touch with the family, and we'll be remembering both Diogo and Andre before the matches while we're here in Asia. And then, of course, when we get back to the UK, and talking to the family also about a more permanent tribute that we will have in time at Anfield as well. But just devastating, of course, and just tragically sad. He was just obviously a really gifted footballer, but a terrific person, and he's deeply missed.
There's never going to be a perfect segue from something as tragic as this. I guess to the point, just to underscore, certainly big shoes to fill on the field, and that takes us into really what's been also busy on your end this recent weeks. The transfer window's quite been busy, and you guys, I think what stood out to many of the fans and many people who follow the club all over the world is suddenly the financial resources are there to be able to bolster the club on the pitch. Give us a sense of what's changed and why suddenly this big, just a massive amount of activity in this transfer window.
There was equal noise last summer in the fact that we didn't spend very much, and so look, our perspective is that we're always trying to improve the squad. That's the most important thing that we can do. Certainly from a football perspective, the focus is on competing, winning trophies, and putting the club in the best possible position to do that.
There's always been, because of the business you're in, the speculation of the commitment of the owners, longer-term commitment of the owners to the club. And I wonder if you could comment on that.
Winning the Premier League, having won a number of trophies over the course of the last 7 or 8 seasons is proof positive that we're going in the right direction, but there's absolute commitment from ownership.
Yeah, well, that's a good reminder for me to not follow certain punditry. Let's put it that way. Well, I think do you think the amount of money that's been committed to bolstering the capacities of the team on the field, should that address some of those concerns?
Sometimes those investments look outsized in relation to other transfer windows, but again, it's all done from a strategic standpoint, and it's always done from the standpoint of trying to do what's best for the club at the end of the day, what's best for the club in the near term, and what's best for the club in the long term.
Now, let's talk about the business.
Sure.
Priorities this year. Let's talk about the next 12 months. What do you want to see?
I would say on the business side, sort of more of the same. The retail side of our business is growing exponentially. We're just about to open our 20th standalone retail store, which is more standalone retail stores than any team in the world of sports. and we're partners with all-star partners here in Hong Kong and across China.
How far along are you in the planning there, in terms of the Japan store, by the way?
It's something that, from our perspective, I mean, we look at each individual market based on its merits. And in the case of Japan, we have a significant following there. And so really it's about finding the right partner.
The future of streaming, I want to get your sense of how you're looking at that as an opportunity. Is that something that's feasible right now within the near future? So
from our perspective, I mean, ultimately the Premier League controls all of the broadcast rights.
What's the hope?
Yeah, so I think, look, we're in an evolving media market, clearly. We'll see that over the course of the next, I would say, decade or so as the media continues to shift from what was previously sort of linear to now what is more of a streaming concept as well.
In terms of the transition from Klopp to that could not have gone better. And so the question I have is, and this is something that a lot of CEOs deal with in terms of succession planning. How do I replace a top performer with another top performer? Any advice on how to be able to do that?
Part of that is about planning, part of that is about strategy, and part of that is having the time to get the right people in place. Being a manager or head coach of a football team is a little bit more difficult because typically you don't have that run up. But in our case, we obviously did, and as you said, it couldn't have gone better.
Yeah, Billy Hogan there, the Liverpool Football Club CEO, speaking to us exclusively. Certainly one of the items in the agenda, multitude of items, of course, this weekend.
Lots to do this weekend, right? So there's the match with AC Milan. Could it be another repeat of what we saw in 2005, that epic final that we saw in the Champions League? So that certainly is one to watch. If you're not a football fan, hey, we got AI, right? World AI Conference in Shanghai, the biggest one in China. So that's certainly one thing to watch. And any signs of any sort of new breakthroughs, new technologies, new innovation, we're going to be getting more of that with Bell there over the weekend. And yeah, there's a recall election in Taiwan there as well.
Yeah. So if you're not fans of domestic conversations in Taiwan, technology, football, you might want to tune in for the streak of industrial profits coming out on Sunday in China. And when you look at certainly what's coming out there is really a symptom of underlying price pressure. So that we'll get an update of that on Sunday. And of course, that goes into next week where we have big Fed conversations, big monetary policy meetings. And of course, in China's case, it's the PMI numbers coming out as well. Now, just one last note on the World AI Conference. Markets are moving ahead of that already.
Yeah, you take a look at some of these application stocks, right? So certainly there's some anticipation of maybe we'll get some more news or something there, right? And they are all rallying right now quite substantially, right? CloudWalk Technology, for example, are up close to 10% here. So, yeah, what's going to be that next kind of deep-seat moment in China? That certainly is going to be the key question as we embark on WAIC in Shanghai. That's it for us here in the China Show. China Market's going on lunch break in just about 30 minutes. Stay with us.